you wish, 127% of that. $94.70, okay, very appropriate target, and our stop remains the same as advised here. It's 92. We'll have of course to lower that now because we can buy all the way down to 92.50. So we all know the rule. We just go down, hopefully to bottoms before our entry. Okay, so if we're going down to bottoms before our entry in this case, that will be a very far stop. Let's stay far away. Okay, we'll then have like this is the first bottom, and that is the second bottom. We'll have to keep our stop at 91.60 instead of 92. That's something like 90 points away if we are adding up 92.60 and of course 93.20. Alright. Okay, so to recap on that, we would still be bullish the dollar index. We see correction going on. We would consider to buy 93.20 and 93.40 all the way down with potential to see 92.50 and 92.60. In this kind of market, you do not go for long targets. Volatility is very tight, there is apprehension, and there are not many traders in the market. Okay, so it's very choppy action, and therefore you would just find the support, any support around here to liquidate at the nearest resistance. Don't hold on to the position. So the nearest resistance in this case would just be 94.30, and in case there is a mild breakout, it's 94.70, and that's it. And then you would reload the position so long as this reload, meaning add longs again into the United States dollar index to higher target every time there is a flip retraction. So long as this weekend at least. Because of wave counting, as has been already explained, because of ballot counting, mail ballot counting, as has already been explained in Pennsylvania and in Michigan and North Carolina. Okay, so our next issue to that would be the United States dollar against the Swiss franc. Okay, it is exactly identical to the Dixie. We did that yesterday, and we were expecting the first completion of a building formation before pullback at below the bottom of one here to form head and shoulder formation, for continuation, weakness in the dollar on issue of stimulus. There was the continuation and a fall of break of this head and S formation all the way down to 0.8. We're not concerned with that now. We're concerned with the broadening wedge formation. That's the broadening wedge formation here. So let's see yesterday's action. We would have we are still completing B. Okay, that goes on another, that's an A, wave S to wave C all the way up to 93.70. That's that value here, and on that chart 93.70 just below 94, the bottom of 1. Well, we will not see this kind of high volatility, so we will implement the same strategy that we've been using with the Dixie, with the United States dollar index. We will buy a force into the deep correction of wave B here to unleash in C. Here to unleash in C, and this gives us impetus or potential to buy all the way down to 0.9040. Okay, so it may look to us that it would be relatively very hard to see these levels. They're far away, but this is actually, it is a slow moving market, but you can see spikes in it, and if you leave limit entries at these levels and they get filled, in such a contested election, you would be making the appropriate type of trade for reasonable profits, okay? Because at this kind of support, you will find spontaneous reflex higher back again to the market high at 92. Okay, so you would leave your entries as the lowest permissible zone. So we can go down all the way to 90.50 and 90.40, then you can reach 90.35, so that's 90.40. Okay, we do not take very high profits. Okay, so just take profits at 92. If you want to be very aggressive in this, you would just go for 137.2%. That would be that level here, and that's 92.50. And then wait for a fallback to buy again into the Swiss dollar against the United States franc for a move higher. You wait for a fallback and buy the fibs of that move for a move higher. You just contain your profits to 80 points maximum, like if you buy near 92, 91, so it's just going to 92, which is 80 to 100 points. Okay? Do not be too ambitious. This chart, and we expected that to terminate with 5 here, to terminate at 1,915. Okay, and then we will be doing some kind of right shoulders to the left shoulder shown here. Okay, so this is actually, this terminated at 1,116. Okay, so that should be a wave 5 now, like this is a 1, 2, 3, 4. Okay, so instead of this is a 1, 2, this becomes a 1, 2, and that's a 3, because our count correction will be only contained above 0.1 here. Okay, so this is what this chart is showing. Okay, diagrammatically, you remember that we should have terminated 5 here, and some traders may think, well, we should fall all the way back to test the bottom of 2. This is only theoretically speaking. The pattern has already terminated and finished. Any corrections will end at the neck. Okay, and this is what actually elevates the numerals or the numbers of a wave pattern. Alright, like we're raising 1 here to this point, and then and so forth, and that point here becomes 3, and then when we do that correction, then we're going to see another cycle in 5. Why do we numerals upwards? Because each advance of these is actually a complete cycle like the one here. So it gets a new label plus 1 altogether. So that was a 1, okay. Now, and that was a 3, that was a 5 during the planning. When that does terminate here, okay, that becomes the 3, and that becomes the 1, because there's going to be a new cycle equal to the initial 1 that we got started with in the first place. Alright, so we do understand that the correction would terminate at the top of 1 here, and this is what we're actually saying. We will not change the market, but we do know now that we will be buying into that. If you want to join this market, we need to buy into that bullish flag, bullish candle, okay, because that's like a 4A, now it's a 4B. We're still going to see a 4C, so we can wait patiently at 1,890 again. This is our loading zone, and 1,893. Alright, and we buy these to targets of the left shoulders. So the maximum targets that the left shoulders will give us are 1,920 and 1,930, and we will higher. Okay, so for repeating our longs, okay, or imitating our longs. We understand that, but will not close below the top of the 1. So our correction is, it's limited to this area here. We will not go lower than this, okay. And now we're going higher into a 5. So we've already done correction A, that's a B. We're still gonna see a C to retest the tops of ultimate and best entry point is 1,890. Okay, and we are going to the top, or we are going to the top of the right shoulder, which is around between 1,920 and 1,930, and 1,925. Our stop, of course, remains at 1,863. We refer the position, okay, meaning that this pattern here, you know that this is going to occur several times. Okay, it's going to occur several times. It could break higher if the currently contested election actually reach a dead end, like it takes more than the end of the week before we see a preliminary result. That is going to take longer in courts. Maybe something will get revoked. Some of the results will get revoked, and then we will see a rise in gold prices. Okay, until that happens, there are no fundamentals to carry us beyond 1,925 and 1,930. These were, of course, the levels shown here. All right, they're pretty much still the same. We're buying 1,885 and 1,990. Our stop remains at 1,960, and our targets are just 1,920 here and 25. Okay, these are the limits of the current right shoulder formation. Okay, also on a contested election, we could buy silver, just like we're buying gold. Treated that yesterday, of course. We were going to buy, we expected that we had formed an inverted head now at the 38.2% correction of this current motive wave, or this current motive. We were going to buy into that wave, and we'd still buy into that wave. Let's look at the current market action. Alright, so this is what we're seeing. So these are the two heads shown here, or how the two heads that I'm outlined here too. Okay, so that was a motive wave, and we expect a repetition now of that. Ultimately support at 126. Okay, after doing 120, at $26 after striking 29 or 28.5. We will not go for targets that high, so we'll just go for the target which is here 26. Okay, and this is what the market is currently showing us. Okay, so this is our wave 1 here, that's the 1, 2, that's the lender. Okay, so that's the right sound that we go by now. Again, the labeling does not mean that we would test the bottom of 2. No, we will really go spike lower all the way to test the top of 1, which is here. This is how we know that 1 is indented here in the first place, because that test literally, theoretically, will always strike the top of 1. Okay, and now we can expect to see a 4C, that was a 4A, that's a 4B, to 4C to equate with 4B here, which is around $23.30. Alright, and we take that to 26. Just to see how these entries. Okay, so we lower entries down to 23.30 or 23.40. This is that level here, that's 23.22. We're looking to try and enter again between 23.50 and 23.30. Okay, so that arrow moves a little lower to the neckline, and our target is of course the neckline. Okay, at 25. Like I've been saying, we shouldn't be greedy and go higher. You could of course attempt higher, but I doubt if it will be filled in this kind of protracted and chaotic environment. We are of course taking targets. Alright, is a left shoulder. We are taking targets at inside the left shoulder and at the left shoulder height. So these would be 25, 50, and 25 at most. Okay, alright, so for silver, the current fundamentals dictate that we should. Okay, we were poised to buy into that once there is congestion or once there is election contestation of the election, and this is what's happening now. So we understand this is our bullish motive wave, and we could correct it all, but we probably only correct until the neckline, and this gives us entries at 23.50 all the way down, spikes to 23.40 and 23.30. Our target is 25. Stop is right below 0.2 here at 22.40. Still remains the same. That was our stop here in the first place at 22.40. Okay, so we move on to other risk adverse products, risk adverse issues. Remember that we're doing primarily risk adverse issues because of the current stalemate in the US elections, which could lead to prolonged contest elections. Alright, let's take a few questions first before we move on to the United States dollar against the yen. There's a question regarding the US dollar movement. Okay, so the US dollar should appreciate. We already treated that in the BIXI, the US dollar index, and in the United States dollar against the Canadian, against the Swiss franc, against the Swiss franc. Now, so long as if this is going to go to court, the US dollar will keep appreciating. Alright, remember that there is literally a lame duck administration or a stranded administration that cannot issue stimulus and cannot weaken the US dollar, alright, until there is at least an election result. Okay, so the US dollar stays strong until we finally get a result. Know that the new administration, whoever that is going to be issuing stimulus. This is when that we can consider the United States dollar to weaken. So potentially for the time being, given the current prolongation in the electoral process and more problems that could occur out of this, the dollar is a risk, is a safe haven, alright. There is excessive risk, and so the dollar will rise. We would contemplate to buy the BIXI, the United States dollar index, and the United States dollar against the Swiss franc. dedicated piece. We will be doing that probably by the end of the session, of this coming session. This does not, it is not the same with the United States dollar against the yen. Okay, this is a different issue because the yen in itself is an issue of reserve or safe haven, all right, for Asian companies and Asian currencies, and people tend, and traders and investors would hedge into the yen when there is excessive risk, like what we're seeing now with equity markets and the US elections. Okay, so the dollar would fall against it, all right, but rise against probably all the other majors, okay, and the index will rise, of course, and it will rise against the United States. There's another question regarding sterling against the United States dollar. Is it a sell? Well, you can actually buy and sell sterling. We'll do that. The two majors, United States dollar, the sterling pound against the United States dollar is a buy and a sell currently. It's a consolidation market. We'll trade that in detail very shortly. And the euro dollar is also a buy and a sell. Ultimately, after this period of contesting the election is over, both currencies will be rising against the US dollar. Why is it a buy and a sell? Because there's going to be a breakout in equity markets on US dollar stimulus package. Most of the package will go into equities, and these two currencies are used to fund equity purchases, so they will rise in value. Alright? Until this happens, they will not fall hard against the United States dollar. Okay, so you could sell them at resistances, like we'll see how now in a minute. Okay, but you shorten your targets. You don't go for long targets, okay? And our basic bias is to buy into them. Okay, so let's move on to the next issue. That would be the United States dollar against the Canadian. Well, now we have, of course, contested elections that we have been looking forward to having all the time, all right? And according to our investment into the United States dollar, has been following with us, and we were selling the assumption that when there is a contested election, we'll see all this go all the way down to actually 101 initially. Okay, so this could be starting to happen now. Alright. First, we need to update, this wave count has been updated. This is what we're currently seeing on the market now. So now, the numbering has been updated, like if you were looking at that chart here. Okay, that was, I believe, even that chart here, that was our big management chart, that was a 1, 2, and that was a 3, and we did not expect 4 to go above the neckline, okay, this neckline, or above the bottom of 1. We are up to, that was 4, we actually protected 105.35. So it would have risen above, I believe, 1 here. It would have risen above that point, is 105, I guess. Contested that point, and this led to reviewing the count, and this is now the new count that we're working with, or this is now the new growth rate that we are using that should be driving the market lower. So it's like this is a 1, 2, and that was a 1, 2, 3, 4, and that is a 5, so that's a 3, and that was a 4 in an A, B, C, so it's somewhere here. Okay, and we can now sell that issue comfortably. Okay, we know that this is now elongate to that kind of pattern. And that our current targets for this move are going to be 103, 103.50 I believe. Okay. Alright. Okay. Good. Now, of course, we're going for 101. So if you wish to enter this, to sell into this move now, is the opportunity to sell into that motive with that is the current bearish growth wave that you will be seeing. Alright, and that gives us entries at 104.75 and 104.6. Alright, ultimately at the 5. So we're very close to that now, 104.51. Okay, so we would sell into these. Our stop, of course, would be right above the 22, which is about 106. Okay, so we were carrying something like 150 points or 140 points. If you're comfortable with such a high risk. Okay. You may wish to take that lower to 105.5 or 130. 2 peaks higher gives you 105.7 or 105.6. Okay, on the belief, of course, on the assumption that actually our entry becomes invalid if this if we break above this point here, above the bottom of 1, which is at 104.7. Okay, so we would show 104.7, 104.6, 104.5. Our stop is 105.7. Okay, and you would go for initial, if you were day trading this, you would go for an initial target of 103.9, right about here. Moving too fast on the screen, I'm sorry. Right, so you would go for that target here, 103.9. Okay. I remind you, of course, that we see potential on this move to go all the way down to 102.5 on that signal, that bear trader signal. Now the fundamentals should be working for us. Okay, the dollar should be depreciating against the yen because this is the start of the contestation process of the election. We cannot know where this is going to lead to. So we should assume the worst would happen, and this would be in the favor of that position that we're seeing in front of you here. So we can hold that instead of 102.8 around somewhere here. We could hold that all the way down to 102.5. To hold it on this position in particular, you could hold it on, of course, all the way to 101.5 and 101. And even 97. That's it, 101.5 and 97. We did that several times and are of course familiar with this trend. So just outline, you can buy and sell into that. Okay, so remember that yesterday we were saying that you would actually sell into the euro dollar if there is a contested election on the belief that the dollar would rise against all measures and against all measures naturally, okay? And the index itself will rise. Well, the index is rising, but the dollar will not be rising against all measures. Why would it not rise against the United States? Why would the United States dollar not rise against the euro? We have been observing the movement yesterday, and of course it was very choppy action. Okay, this would lead lead you to believe that the corrective pattern that we have been speaking about here, remember that if there were going to be a contested elections, we were going to sell into the right shoulder here, okay, for break of the neckline. Well, I stress that the equity markets are discounting that either case, alright, and they will be having a stimulus package. Okay, and that means that if they're going to be having the stimulus package, then equities are going to go up. Okay, and this is what we're seeing here. We can see a correction now. We know that this is a 5-way structure down. That's 1, 2, 3, 4, 5, and that is an A, B, C. Alright, so if you are going to day trade this, you could actually sell the old high here, but this is trade. Okay, you got. So long as there is congestion on the market and the elections are being contested, you would be simply selling into the right shoulder here or the higher head. I believe it's better to enter into the higher head. You're entering between this dotted selling between this dotted green and dotted red zone. Ultimately, they give you about 1830. 1.18 and 1.1830, alright, these highs, and you go for the neckline. You take profits at 1.1630 or 1.1635. Okay, so you could do that trade as a day trading position. The main primary position, I believe, would be to long. Alright, we would want to long because we believe the markets are going up. That the dollar is going to rise against the euro was correct on elections being contested. Okay, in the presumption, let me repeat myself, in the presumption that the United States dollar was going to rise against all other assets, including the majors, the euro, the sterling, everything else, was just at point blank correct, then this should have fallen lower this morning. Alright, when here that the elections are going into trouble and we're going to be contested. But it appears that the fact that equity markets expect a stimulus package either way gains more importance and relevance than a contested election. And therefore we would buy that, okay, that wave here, because we still believe there's going to be a break higher all the way up to 122 and 120. Depending on which way you want to trade this would be now the buy to buy, and this would now be the time to buy in it. Alright, so like they even have a breakout regarding this today, that the euro against the United States dollar is underpinned by rising equity. It is supported by rising equity, which is what we're seeing here. Alright, it's not going to break lower. Okay, and that way. Strange that it may look. You don't even have to take it down to the 15 minutes. Okay, you would want to enter long 1.17, 1.1690 and 1.1675 or 1.1680. Right, right below, of course, we see here that was already 1.16. Okay, if you wish to be more conservative, I don't think we need to be more conservative. Where we see bottoming out either case, and that if you're supposed to be more conservative, you take it to bottoms down. That was the first one, that's the first bottom. That's the second one, you could take that just drop down to 1.1530. Okay, but I believe there isn't even need for that, right? You need to buy into that current bullish candle that you are seeing, and that will be 1.17, 1.1690, and 1.1680. So you're buying between 1.1680, 17, and your stop is 1.16. This is about 100 point stop. You're going, of course, for the old high made at 1.1860 initially. Okay, that would be the best option. We do not expect to break outwards higher as yet. Alright, so we will go to target 1.1860, 1.1880 maximum, and then after we break higher above, there's going to be a correction again, like we'll be seeing an inverted double head, and we'll be doing the right shoulder. So we'll still have chances to enter the market again at 117.18 and 117.16 and 118. Alright, okay. So this is one way to treat it, and this is the primary trade that we want to do. Okay, the other why would we want to sell it at the highs? On the belief that the United States dollar would strengthen very, very strongly if new fundamentals break out regarding the elections being contested. Alright, if it comes to bear that this election and may result in cross forbidden riots, social unrest, you know, if you're moving around actions on these lines, this is far-fetched, of course, but in turbulent times, anything could happen, and in that case, equity markets will take a dip, okay, and if equity markets do take a dip, then you should be selling the high, okay. I'm in a consolidation market, alright, and it's like you can buy, of course, see here, take profits at 1880 and 1860 and the top will be here, and sell higher, alright, at 1950, sell spikes higher. Okay, this market is still going to consolidate lower, so you can trade it both ways. You're still doing, you know, the shoulders here on the right. These go all the way up to one. Not expect this move to move all the way up that far, but if we sell in these highs, we will make profits going down. This is a consolidatory market. Okay, so that's alright. Our next issue that we will consider is the sterling against the United States dollar. That too primarily is a buy, but it's in a consolidation. So you could trade it currently both ways. It's very congested action. Okay. Initially, of course, we would have contemplated to sell that. But if that was the correct assumption that this would go down against the dollar, if there is a contestation of the election, see this choppy, chaotic action of yesterday. Okay, so we wanted to sell that on a contested election. We were probably not, we were wrong, because that would have broken below the neckline, like shown here. Okay, so this did not materialize. So it's now a buy. Equity markets will be going up either case. Okay, like just being said, whoever the president is, there will be an equity, there will be a stimulus package that is going to strongly impact equities. So all this noisy price action that we're seeing is simply a correction. You see it always bounced at the top. Term A1, so that was 1, 2, 3, 4, 5, and now we're doing a correction. Okay, so we could buy that all the way down to the neckline on the belief that the 5 would correct right down to the bottom of H2. Alright, or we would want to be in the market and buy the Fibonacci fraction of it, which is right about now. Like now we're seeing the 58.2% fit, which is about that fib is 1.2970. We could consider to buy all the way down to 1.29, which is 1.890 here and 129. Okay, remember I was saying that this is a buy-sell issue, support resistance issue. So if you were to buy that, you wouldn't wait to go all the way. You are expecting this to reach higher in a package, but you wouldn't want to wait all the way until we go big above the old high made. No, we would take our profits at 131.80 and 131.70. Okay. And then you could consider, of course, to short. This is going to be a double head formation. These red arrows here, over here. So you will short this double head at this level, again to retest the next one. So there is no clear cut view that the stimulus package is coming anytime soon. Alright, and there will be a lot of fundamental releases impacting equities, weakening equities that is, and you could make use of that. So we shorten our targets if we're buying currently on the premise that equities will be going up because of the current stimulus at the market highs here at the head. Alright, 131.50 and whereabouts, and we would re-short that all the way up to 131.80. These red arrows here all the way down again to 1.29. Okay, and 1.22. I believe these levels were already shown here. So you simply raise our entry. Okay, 131.40 and 131.50, all the way up to 131.80. Okay, and our longs are shown in, I believe, the Biden becomes president section, where we would buy that neckline now. Right, so to recap on that, the sterling dollar or the sterling United dollar is not a sell primarily, it's a buy. Okay, all the way down at current levels, 29.80, all the way down to spikes. I would buy, I would take buys at 29 and 28.90. Okay, your stop will have to be about 28. Okay, right about that, below that point here. Alright, we go to the double top high at 131.70 or 131.60. Consider to resell again, so long as you still carry up with the United States presidential election. The same situation is valid for the sterling against the yen. Alright, you can see that very clearly. Okay. Initially, if there was a contested election, we would expect the yen to appreciate against all other majors, and that should have broken down below that neckline much earlier than now. Alright, so we should be somewhere here. Remember, we were well, that's not happening when we have a contested election, primarily because equity markets still expect to be going up. It's going to be a high rise up, alright, but it's there. You can see it there. So 1, 2, 3, 4, 5, then we should be buying right about now, 135.60. Okay, our stop of course is 133.60, about 200 points down, unfortunately, right about here. Go buy to move higher. So this is why we would consider, like with sterling dollar, to sell the heads or to sell at the resistances. So let's check on that. Just sell here. Okay, you're selling the heads of the pattern, or you're selling at the resistances of the pattern. So this meeting. This is still consolidating to go higher. Alright, we do know that we should not break below the top of 1 here. This is why we're buying against that, and this is why your stop is, I said 133.50. You can even take it high at 134.20. Must be below 0.1 here. Alright, but it is possible that we would still run lower, even though we're buying now on 35.70 on the presumption that this will hold. Okay, we could spike into these, alright, and do a minor correction and treat that as a wave 1 and then move higher again. Alright, this is how the market works. It gives you multiple chances for entries and exits. Okay, and that is why we would take on this entry our profits at 137.60. Alright, the old highs. We would have ample time on a breakout when there is a breakout, when there's no more congestion, political stalemate, and this will know we will have positive momentum, alright, strong, good positive momentum, and we'll have broken above these highs, and then we can enter with the rise in equities, alright, all the way up to 142. That's what we're planning to do, okay. For the time being, it is necessary, it is really a must, if you want to make any money at all in this kind of market, to keep your target small. Like if we enter here, alright, it's probably a 1-to-1. Don't get greedy, you need to get out here. 133.40, 133.60 maximum, and that's it. And you could consider to reshort that, alright, for something like 50 points down or 80 points down, like if you're shorting 137, 136.70, alright, somewhere here, it is perfectly alright. You'd still make money on it. Alright, the same situation is currently valid for the Euro Yen. Okay, this is of course a clear bullish pattern, even though the fundamentals are not really very strong as yet. There's still a contested elections, but as been noted, the equity markets are at a good stimulus package. So we know now that this is a 1-2, that's a 3-4, that could be a 5, that could be a 4-8, no matter. We have an inverted head and shoulder pattern. We're buying against this point here, so we're just buying the market at 122.30. Your stop is simply 121.50. Alright, don't get greedy again. Okay, we're still going to see a lot of consolidation and resolves, and our most appropriate